Alright everyone, and welcome back to the channel for another on-chain metrics update for Bitcoin. So in this episode we're going to be whale watching. If you're a veteran of the channel, you should already know what this entails. This is a series where we compare the Bitcoin wallet sizes. Namely, we look at the wallet sizes that hold approximately / more than 1 BTC, also known as the retail traders, and we compare this with the Bitcoin wallet sizes that hold more than / approximately 1000 BTC, also known as whales, institutional investors, all of the above. You know the aim of this game by now if you've been watching me for a while. We're looking at how poorly retail has done accumulating through this market, and we look at how whales, large money investors, have done a much better job of DCAing in and out of the market structure, and subsequently we want to take more note of what whales are doing at this moment in time. So with that being said, let's jump right in. Alright, so I'm going to switch things up from the last time that we recorded a whale watching video, and I'm actually going to start off on the Bitcoin ratio of retail to institutional addresses before we dive into the individual wallet sizes. Now, the ratio of retail to institutional addresses is plotted with this blue line over here on this chart, and with the orange line, I'm sure you all know what this is. This is the BTC USD price on a logarithmic growth curve scale. We're typically interested in the blue line. Why we're interested in this is because typically when there are more institutional investors in the market, meaning that the blue line goes to the downside, because once again this is a ratio of the retail divided by institutional addresses. You can imagine when this line moves to the upside, in general there are more retail. When the line moves to the downside, that marks open areas of interest for institutional addresses. Hence, when the ratio or the blue line decreases, that is when institutions are jumping back in and the Bitcoin price is likely to surge. If you want to see how they calculate this metric here, you can see to be a retail investor, you have to have less than 10 BTC. To be an institutional investor, you have to have more than 1000 BTC. Very, very simple. So let's jump into this one. Now, with the retail to institutional ratio address, this is a very, very interesting on-chain metric because a lot of the time, the blue line, which is obviously your retail to institutional addresses, this is highly, highly correlated to the Bitcoin price action. And this makes sense because this market, the Bitcoin market structure, is predominantly held up by retail traders. As you can see, you know, if we look at the wallets with 1 BTC, 10 BTC, 100 BTC, they were accumulating a lot more drastically than institutional addresses. So it's obvious to us when we look at things like this that there are a lot of addresses with roundabout less than 1 BTC. In fact, there's almost a million of them. But when it comes to the whales, at this moment in time, there's really only, you know, above 2,000 of them. So with that being said, you can imagine that this blue line is going to dramatically increase to the upside a lot of the time. But what you do witness with these massive runs to the downside is open interest, where institutional investors jump back in the markets and bring confidence in the market. So you can see, you know, the Bitcoin price action was more or less stagnating in this bear market phase before it went up on a bull market. And during the ranges, this was just before Bitcoin went to 19,000. During the ranges where Bitcoin was right here, you can see a massive, massive dip, meaning a lot of institutional addresses jumped back in. And you can see this was when the price of Bitcoin was around about $400 and $2,800 respectively. Now, with both of these dips, meaning once again institutional people jumped back into the markets, this gave a lot of investor confidence for the markets to move all the way back up. And then since then, 2018 bear market, you can see these more or less follow each other, but sometimes they have these divergences which are very, very strong. Like, for example, if we look back here, and we can also verify this when we look at Bitcoin wallet sizes with more than 1000 BTC, you can see there was a dramatic parabolic accumulation phase between the end of 2018 and the beginning of 2021. You can see more or less there was 1600 wallets, and it moved up to about 2500 wallets. So the whales, institutional investors, they FOMO'd into these markets, and subsequently you can see the blue line dramatically moved to the downside during Bitcoin's most recent bull run up until the 2021 high, which was approximately around about that 69,000 range. But once again, institutions were FOMOing into this market structure since then, and then you can see, you know, as Bitcoin tops out around these ranges, this is when the retail ratio flies back to the upside, and with this you can see the ratio increases and Bitcoin tops, the ratio decreases and the Bitcoin price is likely to surge. So what is going on right now? Well, in general, and we'll be diving into the individualities of the individual wallet sizes in 1 second. But I did just want to give you a quick update letting you know, since the last time we've covered this, there's still a massive surge in retail to institutional addresses, which is more or less like the prologue of what we're going to give you for this, because, you know, as you can see with this ratio, this wraps up everything we're about to talk about very nicely. But institutional addresses, they're just not there compared to retail right now. So retail is surging into the markets. Let's look at what retail is doing at this moment in time. Now, one reason why we specifically look at what retail is doing is because they do such a bad job of these markets, and you're basically better off just doing whatever they don't do. So for example, you know, they more or less just accumulated in a straight line up until 2018. But what you can see is during the phases when Bitcoin has its all-time high, so for example, right here, you can see, you know, it flattens the addresses with less than 1 BTC, or more than 1 BTC rather. But what you can see of this is the price tops, and they're still accumulating, so they obviously didn't do a good job here. The price tops over here. What do? Do they sell out of the market as the price is overextended? No, they just continue buying back into this. Now, coming into 2018, did they dynamically DCA out of the market as the price action was moving to the upside? No, the price went up, they bought. What happened when the price topped and the price started to roll back down to the downside? They started to sell only after they thought the Bitcoin price is top. So, you know, they buy when the price goes up, they sell when the price goes down. They basically buy high. So if the Bitcoin price is moving to the upside all the way up here, they buy high. And when the price dramatically moves to the downside, they sell low. They panic out of the markets. They buy into every rally and they sell into every capitulation. And with this, you can see, you know, when Bitcoin is in these bear market moments, you can see the open interest for retail investors is just not there, as to when we compare what the whales are doing. And then with this, you can see they more or less did a lot of nothing for the past couple of years, and they didn't really do the best job of DCAing out of this market. For example, I mean, they basically did nothing from when the price action was round about 10,000 to when the price was 40,000. They really did not do a lot of anything. In fact, they were slowly selling off, and they were selling off dramatically when Bitcoin was like 10,000. So as you can see, retail, they just do a horrible job of accumulating through these market structures. And when the price is cheap relative to these bear markets, there's just not huge levels of open interest. Like 2018, you can see open interest is low. During the pandemic capitulation in 2020, they did sell into that initially, and then what happened? The price started to move to the upside, and once again, they really only follow the price. Price moves down, they sell. Price moves up, they buy. It is really as simple as that. And at this moment in time, what are they doing? They're buying as the price moves to the downside. So with the wallets that have 1 BTC, and it's the same with the wallets that have 10 BTC. I'm not going to do analysis on all of these because the retail wallets are very similar throughout all of these market structures. You can see, once again, open interest peaks as the top is in, and then as the bear market lows come in, it's just not high amounts of accumulation. Price moves back to the upside, high amounts of interest. Price moves back down to the downside, and then the interest tops. They did actually do an okay job of DCAing out of this market as Bitcoin started to top around about this 69,000 range. But apart from that, really not a lot to report. Wallets with 10 BTC, 1 BTC are both accumulating. Wallets with 100 BTC aren't accumulating right now. There's really not a lot to talk about these. I've talked about this very generically every time I've made a video about this, but there's more or less been the same amount of addresses with more than 1 BTC since the price was $6,000 in 2018. Not a lot of TA I can do on this when, you know, the price action is down, up, down, up, down, up, down, and the wallet sizes are absolutely stagnating. So not a lot to report here, but then this is where it becomes interesting. So We did in-depth TA looking at how the retail wallets did throughout Bitcoin's entire trading cycle, and they didn't really do a good job. They more or less buy when the price goes up and they sell when the price goes down. So, they'll log on to Coinbase one morning, price will be up 20%. They'll say, hey, this is the time to buy. And then tomorrow the price dips 10% and they say, okay, shit, maybe we shouldn't have bought. Now it's time to sell. Price continues to move down, they sell more. Price moves down, sell more. Price moves down, sell more. Price goes up, buy, 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 buy. So that is really as simple as retail is. But then you come over to institutions and you can see they did a perfect job of steadily accumulating this up until the point where it had its first noticeable bull market top at $1,200. We also had the bull run of 2011, but this was when Bitcoin was very, very nascent. So let's look at what institutions did. Now, once again, we've gone through this in depth before, so I did just want to show you the differences. And what you'll notice is when the Bitcoin price is in a parabolic run to the upside before the Bitcoin all-time high is in, they dynamically DCA out of the market. So they sell into these phases where the price is overextended. And you can see over here as well, they did a beautiful job of this because Bitcoin goes on a massive run to the upside, tops out at 19,000. And this was where their interest left. So they dynamically DCA'd out of this market as the price action went to the upside. And then after its first major capitulation, so Bitcoin moved from about 19,000 down to 7,000. This is when open interest started to pick up again. And once again, you can look at this and you can see, there's not a lot of interest in buying Bitcoin while the bear market is in full effect. And then when the bear market lowers in, even before the bear market lowers in fact, they were accumulating from 6,600 BTC and they started dramatically FOMOing in into these lows. I mean, they perfectly called it. Institutional addresses, whales, whatever you want to call them, they've done a great job of navigating through this market. And you can see they heavily DCA'd from 2018. And this is why I like to associate this most recent bull run as the institutional bull run. You can see, the ratio of retail to institutional addresses absolutely capitulated during the phase between round about 2020 all the way down to 2021. But you can actually see since 2018 all the way down to this region in 2021, the ratio was decreasing once again, meaning that more institutions were taking place of this market. Institutions were here to accumulate throughout the entirety of this bear market, and then retail started to FOMO in as the top was coming in, and ever since then they've still been FOMOing in. So once again, what are whales doing right now? Because we want to follow the smart money, we want to follow the people that have correctly navigated these market structures before, and not the people that just buy and then sell when the price moves down to the downside. It's very, very arbitrary looking at Bitcoin wallet sizes with 1 BTC, 10 BTC, and there's just not a lot of data going on with our 100 BTC. But the wallets, the whales, and they're classified as whales as well when you're looking at the Bitcoin retail to institutional ratio. So a lot of people consider if you've got more than 1,000 BTC, then you should be a whale. And this is what I'm referring them to. What are they doing right now as the price moves to the upside? They're more or less selling / stagnating. So you can see the Bitcoin price has been moving to the downside since 44,000, and the interest from these whale wallets has just been diminishing. Once again, they did a perfect job of leaving as Bitcoin was round about this 46,000 range. So Bitcoin topped at 69, but can you really blame them? They sold at 46,500, and then they dramatically left this market structure. Ever since then, they've been slowly selling out of the market. So what does this tell us right now? At this moment in time, it seems like institutions either A, do not have enough money to buy the dip, or B, they don't believe the bottom is in yet. In my opinion, looking at how quickly this chart can snap to the upside and snap to the downside, like here, they're very, very liquid. Whales are very liquid. I mean, from here, there was 2,200 wallets. This moved all the way up to 2,500 wallets. There was clearly the liquidity needed to drag this bull market all the way up to 69,000. And the Bitcoin institutional addresses did a great job of doing this. But at least in my opinion right now, well, looking at the data, they're not buying. In my opinion, after looking at the data, it is because they do not yet believe the bottom is in. Now, I'm going to make a few other videos. I believe I'm going to upload one more of these videos today, specifically where I'm going to be looking at an SPX stock market fractal from 2008, and also why I am of the opinion of the smart money right now. I'm not saying that I'm smart money or I'm a whale. I won't quote on that, but nonetheless, what whales are doing right now is they're not buying, they're sitting on the sidelines. What retail is doing is they're FOMOing into the price as we slowly move up. While we're in this bear flag, nothing's changed in terms of my TA. We did a TA update a day or two ago, 2 days ago, following the CPI report. Just like I've been saying for the past week or so, I still think short-term bullish implications are there. 25,600 in the immediate short term, moving up to the top of this bear flag range before we do inevitably move back down to the downside, 22,500. I'm hoping we break to the downside of this. I'm still of the opinion that something like this is going to play out and we're going to break down to lower price targets. Let's see how it plays out. At this moment in time, we're still in a bear flag, so not a lot to update in terms of the TA. Obviously, you can see I did the TA update 2 days ago. What happened 2 days ago? 2 days ago, we were at 24,250. Where are we at right now? 24,200. There's nothing to update in terms of the TA. I will be doing a TA update in terms of the stock market though. So that's all I've got for you today. Hope you did enjoy today's episode of Whale Watching. And as always, my friends, retail's accumulating. Smart money is not buying. Who are you going to follow? Leave your comment down below. That's all I've got for you today. As always, cowboy out. Peace.